United States and the economy moving on, it's not about who's the president or who called and asked me for a vote. It's about doing the right thing for the American people, Democrats and Republicans, and moving up this debt to making sure that we don't default on our debts is essential to that. And it's essential to our responsibility as members of Congress, and not to say, oh, nobody called me for a vote. That's simply not our responsibility. Now, Madam Secretary, there are consequences if we don't pass and increase the debt ceiling. I mean, like the increase in the cost of borrowing for a home or a car or through one's credit cards, of which folks will say on the other side, I don't have to deal with that, but then it's going to be, play politics with it. So I was wondering, as we are recovering from this economy, what setbacks will a default on debt cost American households, be they Democratic, Republican, independent, non-voters? What cost would it cost us?
Well, I think it would be catastrophic for the economy and for individual families. Nearly 50 million seniors could stop receiving Social Security payments or see them delayed. Our troops would not know when they would get their next paycheck. We have 30 million families who rely on the monthly child tax credit, and they would not receive that relief, at least on time. And as we saw in 2011, when the debt ceiling was raised at the absolute last minute, and investor and consumer confidence was shaken in the run-up, we saw a marked increase in interest rates, a marked drop in the stock market, and when U.S. interest rates go up and the credit rating of the United States was downgraded, that means higher interest payments for everyone who has a loan, whether it's a small business, a homeowner with a mortgage, a credit card payment. Anyone who borrows would see higher interest costs of their debt.
We must raise the debt ceiling for the benefit of the American people. I don't care what party they're from. Let me go to Chairman Powell. Now, the Fed is rightfully focused on controlling inflation while boosting employment with the aim of guiding our economy back to its pre-pandemic normal. And at the European Central Forum, you mentioned that it's urgent for the Fed to resolve the tension between these two policy goals, since taming prices by raising interest rates would weaken our labor market. As the Fed considers its monetary policy, how will you manage the trade-offs between controlling prices and ensuring full employment, and how do you plan to resolve the tension between the two that you spoke on Wednesday?
That's the very difficult situation we find ourselves in. Almost all of the time, inflation is low when unemployment is high, and so interest rates work on both problems now. So right now we're far away from, we think, away from full employment, so that gives us an incentive to keep accommodative policy strong, to keep accommodative policy in place. Inflation is well above target, and we have an expectation that high inflation will abate because we think the factors that are causing it are temporary and tied to the pandemic and the reopening of the economy. And what we say is we just have to balance the two, but I would say our expectation is that inflation will come down and we won't ultimately face that difficult trade-off of having the two goals in tension.
Thank you. The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. And Secretary Yellen, thank you for finally taking the time to appear before this committee. I know that the ranking member has formally requested your presence at least twice within the last few months with no response. Last week, Treasury released the latest data on its emergency rental assistance programs. As you know, $46 billion was made available to supposedly help COVID-impacted low-income families pay off their back rent and to help make mom and pop property owners whole in Missouri's 2nd Congressional District and beyond. After more than 9 months and an entire summer of Republicans pushing Treasury, your own data still shows more than 83% of your funds remain unspent, while millions of renters and property owners remain stuck in limbo. It certainly doesn't sound, ma'am, like it has been a, in your words, expedited program. Now, I have a series of yes and no questions. And because my time is limited, I would appreciate and will insist upon a simple yes or no, ma'am. First, Madam Secretary, do you consider Treasury's Emergency Rental Assistance Program to be a success? Yes or no?
Yes.
Amazing. Are you aware that in December of 2020, when Congress appropriated the first $25 billion for Emergency Rental Assistance Program, funds were to be used by December of 2021? Yes or no?
Yes.
Do you know why Congress set that initial deadline?
Make sure that funds get to those who
Right.
are in need.
To get it out the door to renters and landlords ASAP. Madam Secretary, are you aware that just this past March, Democrats extended the time frame for Emergency Rental Assistance Program to the years 2022 and, are you ready for this, 2025 for the two respective programs? Yes or no?
Yes, there's significant need, and it will continue. And
In
I think that was
2025,
appropriate.
ma'am, I continue. Does extending the program's deadline incentivize grantees to get funds out by extending this? Does it incentivize grantees to get funds out the door, yes or no?
We're doing everything we can, and the states and
Well,
localities
it's not fast
are
enough.
to get it out the door. As I indicated in my opening statement, or in response to a previous question, the infrastructure to do this had to be built, and the pace at which
There was
money is
plenty of
getting out
time
the
for
door
the
is
infrastructure to be
increasing.
set. Our Fed programs, our PPP programs, all of those expeditiously got money to people who needed them. This is a complete and abject failure.
I'm sorry,
Secretary
this
Yellen,
was-
I want to read a quote to you from a Treasury official to journalists on September 24th, and I quote, "To simply take the amount of money that has gone out in the first 5 or 6 months and then compare that to what was allocated for 4 or 5 years is just a meaningless number." Meaningless number. Secretary Yellen is getting money out the door as soon as possible. A meaningless gauge, particularly when we are talking about a pandemic-related eviction crisis, yes or no?
Our objective is to get the money out.
Well,
the
it
door,
hasn't
as
gotten
I-
out the door.
I'm s-
83% of it is still sitting
I'm sorry,
in the Treasury coffers.
1.4 million.
Ma'am, because my constituents in St. Louis and I do not find it meaningless when we are talking about emergency assistance meant to keep individuals and families in their homes today during a pandemic, not years and years later out to 2025. Moving on. Chairman Powell, with spiking energy prices and bottlenecks in supply chains around the world, there are concerns that there is a rise in inflation may not be as transitory as you originally predicted. Given our current economic situation and the fact that Democrats want to pass trillions and trillions more in spending, what makes you believe we will not see more sustained higher inflation, especially when we've seen significant consumer price increases, et cetera, et cetera?
So as I mentioned in my opening remarks, we do think that inflation will remain elevated before these supply side bottlenecks are resolved, and we think that it will then move back down toward our goal.
Time frame?
Well, these are not things that we control. We don't control.
Not very
the supply of
transitory, sir.
semiconductors,
It
for
seems
example.
pretty dug in.
I would say that this is a function of supply side bottlenecks over which we have no control. But I would say that we do expect in the first half of next year to see some relief, depending on the bottleneck in question, and inflation should move down over the course of.
Not a time to be
2022.
spending trillions and trillions of dollars. I yield back.
The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Business, is now recognized for 5 minutes.
Thank you, Chairwoman. Secretary Yellen, I would like to pick up with what Chair Waters was
Ms.
asking.
Velasquez, we can't hear you.
Can you hear me now?
You seem to be unmuted, but the sound is not coming through very well.
Okay. Can you hear me now?
No, we can't hear you. Would you try it again, please?
Okay. Can you hear me now?
Yes.
Okay. Thank you, Chairwoman. Secretary Yellen, I would like to pick up with what Chair Waters was asking on Iraq. Can you please explain the type of resistance the Treasury Department continues to face from some state and local governments? How is the Treasury Department trying to expedite this funding to tenants and landlords who need it the most despite these challenges?
Well, in cases where states and other grantees launch their programs late, they faced an array of complications. The most significant involved obtaining the necessary authorizations from a grantee's governing body, and there were procurement challenges that arise when grantees have to engage outside partners and contractors. We've received a lot of feedback indicating that the guidance that Treasury has released really does give state and local programs the tools they need to move forward expeditiously. And I'd also note that we have been partnering with HUD to send out technical experts who can help grantees accelerate their programs and help them document best practices.
Thank you. So early on, New York was one of the lowest performing states in distributing ERA funding. But significant progress has been made, and the state now ranks first nationally with more than $1.2 billion in payments made or obligated. Unfortunately, more assistance is needed. So the Treasury Department is required to start reallocating excess first-round funds at the end of September. Can you tell us how this process will unfold?
Well, thank you for that question. Our objective will be to maximize the number of eligible households that are served by ensuring that the resources of the program are appropriately aligned with each grantee's needs and ability to deliver reassistance. And reallocation will be really critical in achieving that objective. Our framework, we will identify localities that have excess funds. We'll use clear expenditure benchmarks that increase over time. We will strive to keep reallocated funds within the same state when it's possible, and afford a venue for voluntary reallocation among grantees.
Thank you. Thank you. Under the American Rescue Plan, Secretary Yellen, Democrats reauthorized the state Small Business Credit Initiative, providing $10 billion in federal funds to support up to $100 billion in new loans and initiatives for small businesses through state, territory, tribal, and local governments. Under the program, potential grantees must submit a completed application by February. How is the Treasury Department conducting outreach and working with local governments to ensure completed applications are submitted on a timely basis?
Well, thank you. This is a very important program. Our staff have contacted each state individually to follow up on the application notice, see if there are questions or if help is needed. We have set up webinars. We're assisting in program design, in helping to develop programs, and with respect to tribal governments, we've been conducting extensive outreach.
Thank you. And Chair Powell, would you agree with what Secretary Yellen is saying regarding raising the debt limit, the debt ceiling?
Yes, I think it's essential the debt ceiling be raised in a timely fashion so we can pay our bills, and I think the consequences of that failure to do so would be potentially severe.
Thank you. Chairwoman, I yield back.
Thank you very much. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Secretary Yellen, do you believe that President Biden's reconciliation package proposal, the one with the $3.5 trillion in total spending, will cost zero and be fully paid for?
Yes, I do. We have a full program that the president has proposed to raise revenue that would cover the costs of the program. In the president's budget, of course, there are changes under consideration as this goes through Congress, but there are a host of revenue raisers, and I do believe it will be actually deficit reducing beyond the first 10 years of the program.
Okay, thank you. I mean, yesterday, Speaker Pelosi claimed the same thing, that the Democrats' reconciliation proposal would cost zero, that it would be paid for. President Biden said the same thing in a tweet earlier. So call me skeptical, but given the record of the Democrats in Congress here on runaway spending, I just don't believe it. And I'm not the only one. The Washington Post called President Biden's claim that the bill would be budget neutral misleading and gave it a score of 2 Pinocchios. We're passing bills out of committee, I understand, without even CBO scores, Congressional Budget Office scores, so we don't really know, and that we've not done that before. That's a change in our policy. The truth is we're spending an alarming rate in this country. Since the COVID-19 pandemic began last year, the federal government has spent more than $5.3 trillion on relief. That's roughly $16,000 for every American. Our ballooning debt is not some abstract problem. Out of control spending proposed by Biden and being rubber stamped here in Congress will leave a mess that our children and grandchildren have to clean up and pay for. There's decisions we make today, 20 or 30 years from now, our children and grandchildren have to pay this money back. So I'd like to move to a different aspect of the package. One of the attempted pay-fors in the package that's alarming to me is tax increases. It will make our economy less competitive. So again, to Secretary Yellen, my question is, the proposed corporate tax rate in the House reconciliation bill is 26.5%. This actually moves us higher than communist China's corporate tax rate of 25%. We're going to have a higher tax rate than a country that has been taking our jobs and is communist ideology. Can you explain why raising our corporate tax rate above China's is a good idea, if you think it is? And do you think this would hurt our competitiveness with China and around the world?
Our companies are the most competitive and profitable in the world. The effective tax rate that they pay is very low, and recent studies suggest that among advanced countries, the United States has an effective tax rate that is among the lowest of countries around the world. We can certainly afford to take the corporate tax rate up to 26.5% as in House Ways and Means without negatively impacting firms' performance. And we propose to do that in the context of an international agreement that received the support of over 130 countries worldwide to establish global minimum tax rates that will apply to other countries' firms. Right now, the United States is the only country with a global minimum tax rate on its multinational corporations. We propose to raise that, but at the same time, other countries will raise theirs much more. And that means that the competitiveness of American firms will be enhanced, and we will be reducing the incentives that exist in our tax law right now to export
Thank you.
jobs and profits.
Thank you. I don't know how much time I have left, but thank you, Secretary Yellen. Well, look, one thing we've learned over the last several years is we need to take the threat from China more seriously here in America, making America less competitive. And despite what you said, raising our corporate tax rate makes us less competitive. And our economic adversaries like China, it's too high of a cost for all this spending. Running up these massive debts that our children will have to pay back for this spending is just not right. So despite what we're hearing and what many are saying, this reconciliation package will be expensive in terms of dollars and frankly to the future of our competitiveness in this country, racking up this debt, and I just fear we're going to pay for this for years to come. So thank you, Madam Chair. Back to balance.
Thank you very much. The gentlewoman from Ohio, Mrs. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you to our witnesses today. Certainly, as I've been listening, a lot of descriptive words were used, everything from dysfunctional to meaningless to irrational. Well, I could think of a lot of other words that I could use, but certainly those words are appropriate to describe what Democrats inherited from the last administration, whether that's the irresponsibleness of the past administration, whether it's all the debt that was occurred because of the Trump administration. I think those words are appropriate, just, Madam Chair, by my colleagues, were very misdirected, in my opinion. You should look at your own house and home before throwing stones, and especially when they're not appropriate. Now, with that said, to our two witnesses who've been very responsive, I say thank you. And let me get in quickly to my first question on the Federal Reserve. Certainly, you know, Mr. Chair, we've had a lot of conversations about diversity. I want to thank you for responding and continuing to increase your diversity. But as you know, recently there's been two Federal Reserve presidents who have left, quit, retired, bottom line, immediately leaving or gone from the Bank of Dallas and Boston. So my question is, you know where I'm going with this. I would certainly be hopeful that we could increase our numbers in diversity beyond Raphael Bostic by asking that we use the Beatty rule, pattern after the Rooney rule, to do as we did with the Atlanta Federal Reserve president and make sure in that interview process we have a African American or female. Do you have any comments on that?
I do. Thank you, Ms. Beatty. I can absolutely guarantee you that we will work hard in both of those processes to find and give a fair shot to diverse candidates for those two jobs, as we do. And it'll be a big focus of both of those processes.
Thank you. Secretary Yellen, you will recall back in 2016, Secretary Lew made his historic announcement that Harriet Tubman would be the face on a $20 bill. I sent you a letter in July, early July, along with my colleague, Congressman Katko, requesting the committee to move forward with the Obama administration's plan to put her on the face of the 20. I understand your staffs have been in discussion on this issue, and I am hoping to get a high-level overview and to ask you if there's any comment you can make on this.
Well, thank you for that question, Representative Beatty. We believe it is very important that our notes reflect the history and diversity of our country, and I couldn't possibly think of a better way to honor Harriet Tubman's legacy and her courage in fighting for the freedom of enslaved people and women's right to vote than seeing her on the $20 bill. Issuing notes, as you know, is a very lengthy process. It involves collaboration among a number of different agencies, and it's necessary to design new security and counterfeit features. And unfortunately,
Right.
that means the lead time to redesign new bills and ensure their security is long. When Secretary Liu announced,
I'm gonna go to my rental.
announced
Madam Secretary, I'm gonna go to my rental question because the clock is down, and we will follow up with your staff. Just prior to the new administration coming into office, the former administration rushed the regulations and questions for the rental assistance program. Those regulations were so unworkable that states like my state, Ohio, and others were telling me that they weren't even sure if they would be able to distribute rental assistance funds under those guidelines. Isn't it true that, Secretary Yellen, isn't it true that the secretary under the new administration had to spend weeks going back and redoing all of that to make sure that the funds could actually be distributed?
That's correct.
Thank you. I want that to go on the record. Some of my colleagues wanted to drill down and make our Secretary you in answering those questions. So thank you.
Thank you very much. The gentlelady's time has expired. The gentleman from
My time
Ohio,
is
Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. I thank our witnesses and our colleagues. I appreciate this hearing. Chairman Powell, you have extensive private sector experience, and of course, as Chairman of the Federal Reserve, you have a role in bank regulation. In your experience, do banks or lenders increase lines of credit unconditionally? Isn't there some level of underwriting involved? Wouldn't banks have problems with their regulators if they did no underwriting for a line of credit?
Yes, no, of course, they're very careful in the lending they do.
Well, I submit that it's perfectly rational for Congress to expect something in exchange for an increased line of credit. The plan presented is atrocious. It will never balance. It doesn't even propose to balance in 15, 20, 30, 100 years. There's no plan to quit bankrupting America, Madam Secretary. Now, thankfully, under the Federal Reserve's leadership and 13.3 authority, we had some facilities in place to prevent real financial calamity. So recently, the Subcommittee on National Security, International Development, and Monetary Policy held a hearing to discuss the Federal Reserve's lending facilities under Section 13.3 and how those facilities were utilized prior to and since the passage of the CARES Act. You know, some of my colleagues, I fear, don't understand even how some of the products like bonds or margin calls work, as they've criticized programs where there is literally no buy side in the market. And of course, the Federal Reserve stepped in to create a buy side and support the markets. I've heard colleagues say, well, there were only 2 loans under the municipal liquidity facility, for example, while there were hundreds of loans, hundreds of billions of dollars of credit extended. How important are the 13.3 provisions to the financial stability of our country?
They're very important, but they're reserved for real economic emergencies, financial emergencies. And as you point out, they functioned, I think, very well in the crisis as backstops. That we put them in place and the private capital markets started working. And really, that's success. That's what success looks like.
Do you think 13.3 should ever be used for a political goal or something to fulfill a dual mandate rather than an emergency?
Actually, no, I don't. I think the current institutional arrangements are very good. I think we need the approval of the Treasury Secretary. Realistically, we work with Treasury, and we're constrained for very specific circumstances, unusual and exigent circumstances. There are a number of tests in the law, and I think it's an arrangement that works.
Thank you, Chairman. Recently, Federal Reserve Governor Michelle Bowman gave a speech in which she discussed the evolution and enhancement of bank supervision, particularly during the COVID pandemic. And in that speech, she stated that the Fed avoided overreacting and instead approached supervision in a more measured way that allowed banks the flexibility to work with their customers. There are a range of topics she's addressed and others have with bank regulation. I'll just share this from her paper. She says, the goal of this initiative is to ensure our supervisory approaches accommodate a much broader range of activities while ensuring we don't create an unlevel playing field with unfair advantages or unfair disadvantages for some types of firms versus others. And for that reason, I'm working on a bill that would study the evolution of consumer finance and the viability of updating our prudential regulatory structure through consolidation of bank supervisors. Of course, there's some level of coordination the Fed does, but could either of you give an opinion on a scenario where the United States consolidates banking supervision?
That's something we'd have to look at. I know it does something that does tend to get looked at over intervals, and it hasn't happened. I think each institution has a different role in our society. I know we have more bank regulators in other countries, but we do seem to work pretty well together.
Thanks for that. Secretary Yellen, obviously there are a lot of provisions and a large void in the digital asset space. In your opinion, what is a digital asset for purposes of tax reporting?
For purposes of tax reporting, I believe the IRS is will issue detailed regulations that will answer that question for the purposes of tax reporting.
Thank you. Our law hasn't really kept up with this, and frankly, it's led to regulation by enforcement, of course, with the SEC and a host of others. But I appreciated when you were chair of the Fed, the Faster Payments Initiative that got launched. A lot of this involves payments, but so much in the digital asset space isn't a currency or a payment system. There are a gazillion use cases, and I'd be ashamed to see the regulatory framework curtail that. And I look forward to seeing fintech flourish in the future. I yield.
Thank you. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member McHenry. Chairman Powell, Floridians unfortunately have seen firsthand the impact of climate change, and the impact only becoming worse as we experience more severe and frequent hurricanes and risks of rising sea level. I'm glad to see greater attention given to how we can better assess and manage climate-related risks. It is my understanding many financial institutions conduct scenarios analysis to assess credit, market liquidity, and operate risks related to transition risk, physical risks like hurricane flooding, wildfires, and drought. Mr. Powell, is scenario analysis a good tool in assessing climate-related financial risk? Could you please discuss the difference between scenario analysis and stress testing? What other tools does the Federal Reserve have to assess climate-related risk, financial risk?
Thank you. So our role, of course, is to make sure that the financial institutions we regulate and supervise understand and can manage their risks, including the risks from climate change, the financial risks from climate change. Scenario analysis is almost certainly going to be one of the principal tools for doing exactly that. And it's very different from the stress test. Scenario analysis at this point is about institutions really understanding what these risks will be, how they will develop over time, what are the channels through which they will develop. And it's sort of early days in understanding how those risks will interact with the economy and with the financial system. Scenario analysis is meant to help do that. And we at the Fed are working on developing a program of scenario analysis. Many of the large institutions are doing so, as I mentioned, quite different from stress tests, which have consequences for distributions and that kind of thing. I think overall, we see our job, as I mentioned, as making sure that these financial institutions understand the risks and can manage them, and that's just a lot of basic supervisory tools, understanding what they're doing, and have the processes in place and the analytical tools in place and the focus, and that's what we'll be doing.
Okay, thank you. Secretary Yellen, I am concerned that small business, particularly within the communities of color, will have lasting economic damage coming out of this pandemic. The American Rescue Plan extended assistance to small business by authorizing a $10 billion program called the State Small Business Credit Initiative, with $2.5 billion of these funds set aside for minority-owned business. The Florida Department of Economic Opportunity is waiting for the Treasury to release applications, requirements, and program guidance. When can we expect the guidance to be released? And can we share our Treasury plan to ensure that the assistance goes to small business that will be highly impacted by the pandemic?
It's the state small business credit initiative is an extremely important program, and we are in the process of implementing it. We will absolutely make sure that it reaches small businesses that have been very severely affected by the pandemic, and certainly in underserved areas and communities of color. I think you know that Congress required that Treasury provide funds to states based on the extent of job losses that had been suffered, and it sets aside significant funds for businesses that are owned by socially and economically disadvantaged individuals. So we will make this funding available and provide technical assistance, working with communities to make sure that it's used as intended.
Okay, thank you very much. And with that, I yield back.
The gentleman yields back. The gentleman from North Carolina, Mr. Budd, is now recognized for 5 minutes.
Thank the chairwoman and thank the witnesses. You know, the federal government's spending, and I'm not even talking about debt, but just the spending here, it's expected to reach record highs this year, 2021, and Democrats are trying to dump trillions of what I believe is very reckless spending into an already inflationary economy. So as a percentage of GDP, our public debt has reached 125% in the second quarter. Secretary Yellen, very briefly, do you believe that there is a level of debt that is unsustainable in our economy? And if so, what is that number? And you can share that with me either in dollars or as a percentage of GDP.
Well, I believe that the debt held by the public relative to GDP is around 105%. And that's a number that is higher than we have had during most of the post-war period in the United States, but it is not a number that I think is fiscally irresponsible or unsustainable. Interest
Madam
rates,
Secretary, do you have a number that is the threshold that is irresponsible, either in percentage or in dollars?
well, one way that I would judge that is by looking at the interest burden, the real interest burden on the debt. That really is the burden, a better measure of the burden it places on our economy. And this year, that interest burden has actually been negative. Interest rates have been exceptionally low. This dates back to before the financial crisis in 2008, and most economists believe that there are deep structural reasons why low interest rates are likely to continue, even if nominal interest rates move back toward more normal levels. That interest burden
Just because I want to be
remain low.
aware of the time constraints, thank you, Ms. Secretary. If the interest rate was zero, what is irresponsible in percentage or dollars?
Well, I think that if the real interest burden stays below
If it's as
historical
is,
norms, What, I'm sorry, if interest rates are zero?
If it's, let's say zero, let's say as is, pick one of those, and let's say what is irresponsible as a percentage or total dollars of debt?
Well, if interest rates are zero and negative in real terms, certainly we could have a substantially higher burden, although there are always risks pertaining to the path of interest rates that need to be taken account of.
I understand. Thank you. Let me shift gears a bit. In one of my recent telephone town halls, I asked a poll question to those who were able to join me. It said, have you or your family noticed a sharp rise in prices for food, gas, or electricity? And 94% of the respondents, and it was a good sample size, they said yes. Inflation is eating away at the buying power of every single North Carolinian. And bottom line, inflation is a tax on working Americans. So Chairman Powell, I know that you've called the inflation that we're dealing with transitory, and boy, I sure hope you're right. But what would you tell people back in my district, especially those on fixed incomes, when they are struggling to make ends meet right now? What would you tell them?
I would say that we are dealing with a very unusual event that's really part of the broader COVID event, that the economy is now reopening, that we're hitting supply-side bottlenecks. For example, it's hard to manufacture cars without semiconductors, which are in short supply, so car prices are going up, and lots of prices are being affected by supply-side constrictions. We expect that those will abate, that they'll lessen, and over time inflation will come back down. Exactly when that will happen is not possible to say, but I would say we should be seeing some relief in coming months and over the course of the first half of next year.
I hope you're right. The folks I talked to back in North Carolina are doubtful of that, but I do hope you're right. Chairman Powell, next question. So in a July hearing before this committee, you were asked about CBDC, or the central bank digital currencies, and their impact on stablecoin and other cryptocurrencies. And you stated, and I think I quote you correctly here, you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital U.S. currency. So, Mr. Chairman, as a matter of policy, is it your intention to ban or limit the use of cryptocurrencies like we're seeing in China?
No, and I immediately realized I had misspoken there. I didn't mean that take the word cryptocurrency out of that sentence, and I would say it's fairly widely understood that central bank digital currencies could perform could make.
But no intention to ban.
Less.
No intention to ban.
No intention to ban them, but they're, the stable coins are like money market funds, they're like bank deposits, but they're to some extent outside the regulatory perimeter, and it's appropriate that they be regulated. Same activity, same regulation.
Thank you. I yield back.
Thank you. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you so much to our witnesses. We are truly fortunate to have you at the helm of steering us through some past and future crises. I want to talk about those, but before that, I want to just talk about manufactured crises, which I'd like to avoid. Congress, everybody on this call in some fashion has voted to approve our spending. Congress, everybody on this call in some fashion has voted to decide how much of that spending will be paid with tax revenues. And then somewhat uniquely, we give ourselves the authority to decide how much of the residual, which is paid with debt, we are going to pay for. It's political suicide. I am a co-sponsor and supporter of my friend, Mr. Foster's bill, H.R. 3305, to end the Default Act and take that tool away from Congress, because Congress has proven that we cannot be trusted with that responsibility. Secretary Yellen, without getting into the specifics of Mr. Foster's bill, would you support simply eliminating the debt ceiling so that we don't have to deal with this in the future and can focus on real crises?
Yes, I would, because I believe when Congress legislates expenditures and puts in place tax policy that determines taxes, those are the crucial decisions Congress is making. And if to finance those spending and tax decisions, it's necessary to issue additional debt, I believe it's very destructive to put the President and myself, the Treasury Secretary, in a situation where we might be unable to pay the bills that result from those past decisions.
Thank you. I'm glad to hear it, and we'll hopefully try to get that through Congress. Moving on to past crises, Chair Powell, I think all of us in all of our districts are hearing about labor market tightness, and I think a lot of people are explaining that labor market tightness to justify pre-existing political biases. As you know, and we've talked about, we saw unemployment go from 3.5% to almost 10% and back down to 5.2%. But I'm much more concerned that workforce participation went from 63 to 61 and has stayed low. Can you just explain for the committee briefly what is driving the reduction in workforce participation, and what, if anything, we can do to get that number back up to make sure that employers have access to folks who are ready and able to work?
I'd be glad to. So the two biggest parts of that are caretakers and retirees. So that makes up a lot of the shortfall from where we were with labor force participation before the pandemic crisis. And within caretakers, some of that is going to be connected to schools not being opened or people who are afraid to go into an unvaccinated workplace and are afraid of COVID and things like that, and other reasons. So that's a part of that, and that should abate over time. In terms of the retiree piece, it's not clear about that. I would say the lore is that people don't come out of retirement, except I would say all during the last few years of the very long expansion that ended with the pandemic, we were constantly surprised to the upside on participation, including older people staying in the workforce longer. So I think my prior would be that we will get back a big chunk of the so-called retirees, and that we should be very open-minded about how much labor force participation can go up. The United States has low labor force participation compared to our advanced economy peers, and this is not something that has to be that way. It's not something that's good.
Well, thank you for that. Certainly, when I talk to folks in the district, everybody kind of acknowledges that it's the boomers who retired who are creating a lot of their skills gap, and that's a harder challenge. Going back to you, Secretary Yellen, I think subsequent to your first FSOC hearing, when you identified climate change as an emerging threat, President Biden issued an emergency order on climate financial risk, directing agencies, including yours, to analyze and mitigate risks that climate change poses to the financial system. In the little time we've got left, can you give us any updates on status, milestones, and deliverables that the Treasury Department has in response to that executive order?
Yes, we're in the process of completing the report, and we expect to issue it in late October or early November within the 180-day time frame. And what we'll be doing is looking at the work of individual regulators to incorporate climate change risks into their regulatory and supervisory activities, and describing some of the challenges that they face in carrying that out.
Well, thank you. I'm out of town. I will clear my calendar to allow some time to read that week, and I yield back to the chair.
Thank you very much. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
Thank you, Madam Chair, for calling today's hearing, and thank you to the witnesses for appearing. Secretary Yellen, if I could, there was an article in the Wall Street Journal dated September 15th. The headline is, Yellen, IRS pushed Democrats to require banks to report taxpayer annual account flows. And I want to read the first two paragraphs just briefly. Treasury Secretary Janet Yellen and IRS Commissioner Charles Reddick pressed lawmakers Wednesday to give the Internal Revenue Service more information about taxpayer bank accounts as the Biden administration tries to salvage its struggling tax compliance proposal. In letters to lawmakers, the administration officials again asked Congress to require banks to report annual inflows and outflows from bank accounts with at least $600 or at least $600 worth of transactions, a proposal aimed at letting the IRS target its audits more effectively. It would generate about $460 billion over a decade to cover the cost of Democrats' planned expansion of the social safety net and climate change policies, according to the administration. Those are the first two paragraphs of the story. That's an accurate reflection of what you've what you've done, correct?
Yes, we have proposed both augmenting the resources of the IRS so that it can hire qualified auditors and augmenting the information flow so that the IRS gets insight into opaque sources of income. And both together, we believe, can serve to greatly address the $7 trillion estimated tax gap that we'll see in this country.
And Madam
over the
Secretary, you would
next
tell my
decade.
constituents that they should not have any privacy concerns about what you're trying to do.
Well, they should not, because this is a simple matter for banks that already file 1099 int forms
Madam
with the
Secretary,
IRS.
the IRS
give
leaked
two
leaked
additional-
information about taxpayers to ProPublica that was published, their entire tax returns, their entire tax information. On the record, you tell my constituents and all the other members here, their constituents, that they should have no privacy concerns about banks reporting $600 or more in account value to the IRS.
What we've asked to have reported is the aggregate inflows and outflows from these accounts each year on an annual basis, 2 additional pieces of information, not transaction level data. And look, every wage earner in this country
This
has
says
their
bank
wage
accounts of at least
income.
$600. Is that a correct statement?
Well, we want to make sure that this can't
That's
be
different from
gamed by
transactions.
expanding.
Those are values of $600.
There's
The Wall Street
possi-
Journal is accurate, correct?
Excuse me?
The Wall Street Journal's
We did-
report
we
is
did-
accurate,
we did
correct?
We did propose that. I don't believe it's an invasion of privacy. And look, the IRS gets a great deal of information that it needs in order to make sure that taxpayers comply with the tax code. It receives individual information on wages and salaries that are received, on dividends, on transactions, on...
How did ProPublica receive this information from the IRS about the individual taxpayers?
Excuse me?
How did ProPublica publish and obtain the information from your agent, from the IRS, about taxpayer information?
Independent agencies and law enforcement are currently looking into that and attempting to figure out how that occurred. That is clearly a crime and an utterly unacceptable thing, and it will be prosecuted when it's understood, when
But
these
your
agencies have...
proposal purports to give more information to the IRS, drilling down to accounts of $600.
We want to make sure that individuals can't game the system by opening multiple accounts in order to evade the...
And that you give the IRS all this other information about individuals. Last question, Madam Secretary. Do you support a move to the Department of Treasury from Homeland Security of the United States Secret Service?
I haven't taken a view on that.
Thank you. I yield back my time.
The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Madam Chair. I'm appalled by the Republican gamesmanship around the debt limit. I heard a Republican colleague on this committee complain about not receiving a phone call from the administration or complain that we, the Democrats, are too partisan. The Republican argument seems to be the following, that since the Democrats have been mean to us, we are going to sabotage the full faith and credit of the United States to exact revenge against those who have slighted us. And that kind of pettiness has me wondering, are we in high school or the United States Congress? Now, it has to be said that the debt limit, raising the debt limit, would not authorize new spending. It would simply pay the debts of previous administrations, including the Trump administration. So the Republicans cannot pass $2 trillion worth of tax cuts and then refuse to pay back the debt that made those tax cuts possible in the first place. That, to me, is worse than fiscal irresponsibility. That's fiscal hypocrisy, and I support Congressman Foster's legislation abolishing the debt limit so that we're no longer at the whims of bruised egos slighted by unreturned phone calls. Suppose for a moment it is October 18th. the use of extraordinary measures is exhausted, what happens on October 19th?
We're simply in an impossible situation in which it will be impossible for Treasury on that day or a few days thereafter, depending on we'll have very limited resources that will be run down quickly. We won't be able to pay all of the government's bills. The Treasury has been directed by Congress to pay all of the government's bills, to use the tax revenues that are available, and without that to issue debt. And the debt ceiling will make it impossible for us to do that.
And the damage could be irreparable.
Well, yes, and we got a taste of that in 2011 when the debt ceiling wasn't raised until the last minute. The fact that Congress might not raise the debt limit and call into question whether or not what is regarded as the safest asset in the world, dollar-denominated U.S. Treasury debt, will actually be repaid is simply a catastrophic event.
I want to follow up on an exchange you had with Congressman Budd, who asked you about the debt to GDP ratio. The U.S. debt to GDP ratio is over 100%. What is Japan's debt to GDP ratio?
Excuse me?
What is Japan's debt to GDP ratio?
It's about 250%.
It's the highest in the world.
Yes, it is.
And Japan is regarded as a successful economy.
It is, and Japan also has low interest rates and has not found.
And I agree with your premise that the cost of servicing debt is a more reliable measure of debt sustainability than the debt to GDP ratio. And if we were to breach the debt limit, as Republicans would have us do, it would actually raise the cost of borrowing. It would raise interest rate payments,
Yes,
which
it
would
would.
make our debt burden less sustainable, not more.
That is absolutely correct. It would be regarded as riskier. We might suffer, again, a credit downgrade, and coming out of that, we could expect to see higher interest rates on Treasury debt and on the debt that private individuals have, mortgage debt, credit card debt, auto loans, and everything else.
I want to quickly ask you about a Title IV loan under the CARES Act. During the Trump administration, the largest recipient of the Title IV national security loan was a trucking company, previously known as YRC Worldwide and presently known as Yellow Corporation. Do you think a nearly bankrupt trading company, whose conduct is the subject of a DOJ lawsuit for overcharging, should have received the national security loan from the Trump administration?
I'm afraid I don't know the details of that, and I'd be glad to have our staff get back to you on that.
And I want to be clear that this loan is the subject of scrutiny from the Bipartisan Congressional Oversight Commission and the Select Subcommittee on the Coronavirus. You said that at the end of September, the funding for the emergency rental assistance might be reallocated. Up to how much funding might be reallocated?
I can't give you a dollar estimate, but the objective would be to shift it to areas where there's need and proven success in getting it out.
And if the use of extraordinary measures is exhausted on October 18th, what does the Federal Reserve do on October 19th? What actions do you take in response, if any? And that'll be my final question.
I guess I would just say no one should assume that we can really do much to if there were to be a default on our obligations, no one should assume that the Fed or anyone else can fully shield the American people from the consequences of that.
My time has expired, so.
The gentleman from Indiana, Mr. Hollingsworth, is now recognized for 5 minutes.
Well, good morning. I'm going to ask most of my questions to Secretary Yellen. First and foremost, I want to associate myself with the comments that Mr. Kustoff made. I love serving on this committee. I have a great time working on the policies that emanate from this committee, but rarely does something that this committee do lead to questions in the grocery store, questions at convenience stores, and questions around my district. But I have to tell you, the proposal that has been put forth about expanding the amount of information that the IRS is going to get on private bank accounts has been something I've been asked about at parks, at grocery stores, at convenience stores around the district. This has people deeply afraid about the emergence of an apparatus that can be used against them. So I want to better understand with specificity what is being proposed, because what I saw in the proposal as circulated by Treasury was extremely generic and somewhat incongruent with what I heard today. You said to Mr. Kustoff that the only things that will be reported to the IRS under your proposal is the gross inflow and the gross outflow from that particular account in a given year. Is that accurate or inaccurate in what you have requested?
The proposal put forward by the administration requested a bit more information than that, but what is under consideration now in reconciliation would be limited to those two pieces of information. And this would be what you should tell people who ask you about this in the park is that right now, much of the audit time of the IRS is devoted to taxpayers that have relatively low incomes. And we know that the tax gap is something that comes from opaque sources of income and from high-income individuals.
So I need to tell my
The audit rates on individuals earning less than $400,000 would not increase. This would
Wait a minute.
audits
They're not worried about the
to
audit
those-
rates, reclaiming my time. They're not worried about the audit rates. They're worried about yielding their privacy, yielding their transaction history to a
There
federal
is
government,
no- there is no transaction
reclaiming,
history.
reclaiming my time, to a federal government that has shown itself time and time again mobilizing that information against individuals, against organizations, and against businesses, has shown itself incapable of protecting that data from
There is
breaches by
no-
nation states,
there
from
is
breaches,
no-
reclaiming my time. This is deeply concerning to them. So forgive me if I won't go back to them and say, don't worry, despite all evidence to the contrary,